So today, yet again, we saw Tesla stock close in lower than the day prior. Now today, of course, we had the ADP report showing that 324,000 jobs in July were added, which was well above expectations. Now this data comes in just a few days before we get the government job data, which comes out on August 4th. Now I recently briefed the Push and Profit private group saying that, hey, if we come in with hot job data from the ADP report, well, the markets aren't going to really like that. Now I know this is confusing because typically when you see hot job data, well, that means that, the overall economy is doing good, we're adding jobs. Well, one of the things I've told the Push and Profit private group a multitude of different times is the fact that right now we don't want to see job data really scorching hot. And the reasoning behind this is because we know that the Federal Reserve is looking at this job data and they're interpreting it, right? They're parsing through it just like we are, and they want to see job data cool off. They want to see the labor market cool off, especially these wages, because of course they're still battling inflation. And so if we come in with hot job data, well, that kind of spooks the market a bit, kind of, making everyone worried about the fact that the Federal Reserve may continue hiking. And of course, when the Federal Reserve hikes interest rates, well, that has a ripple effect on the overall economy and of course this the stock market. Now, in addition to the economic data that we had today, I also shared with the Push and Profit private group that we had some unique alternative data that I want to go ahead and share with you guys. So basically, Senator Thomas Carper has entered into a bet against tech, right? So he recently disclosed purchases of around $60,000 for ticker symbol PSQ, which is the Pro Share Shorts for QQQ, the ETF. And so that's basically kind of betting against the NASDAQ. So when the NASDAQ goes down, well, this ticker actually goes upwards. And if we actually take a look into when he executed the trade and where we're currently at now, we see that this trade is curling upwards. Now, the reason why I often emphasize following what these senators and politicians are doing in regards to their trades is simply because they oftentimes have more information than we have, right? Especially because a lot of them sit on special committees, or some of them have, access to making, just decisions on, fiscal policy, or have access to change laws that could influence what happens in the overall stock market. For example, Senator Thomas Carper sits on the Senate Committee of Finance. And so this unique alternative data, along with the economic data that we're seeing, kind of falls in line with what I've been saying on being kind of bearish on tech in general in the short term. But of course, we also got some more bad news with Tesla, with this post going semi-viral on Reddit where someone posted saying, "Never buy a Tesla. My dog has been trapped in my car for 9 hours, even though I have a key and an app. I tried everything and will break the window if I can't get in soon. Here's my poor pickles." Now, I know that this post doesn't have any significance on the outcome of Tesla stock, especially even in the short term. But one of the main concerns of, this anecdotal, negative news going out there is that, negative news can pretty much spread rapidly, right? And I shared this tweet that Elon Musk recently posted on x.com that explains this very well, that I want to go ahead and share with you guys in this video. Now, someone said, "Why is there always so much negative news?" And Elon Musk responded saying, "Evolutionary bias. Positive news is nice to know, but negative news for almost our entire evolutionary history could mean death, so higher priority. What really messes things up in the modern era is that negative news can now reach everyone on Earth, but still triggers a limbic danger response even when there is no actual danger." And so that post that I shared with you guys is very anecdotal. It doesn't have a huge impact on Tesla stock, but the concern is that, we keep seeing more and more negative news pop up with Tesla and how it's actually a bad vehicle. And of course, this could really mess up the sentiment for individuals looking to buy Tesla, which of course could eventually bleed into corporate profits. Now, I know that's a little bit of a stretch, but at the end of the day, we want to pay attention to the news that comes out with Tesla. That's just a catalyst event that we obviously want to really wrap our minds around and kind of be aware of what's currently going on with Tesla and what's being said about Tesla vehicles. Now, I want to go ahead and hop into my laptop and talk about Tesla both from the perspective of a long-term investor and also from the perspective of someone trading Tesla in the short term, and also cover some additional details that I think we really need to absolutely pay attention to, especially if you're someone anyone that's interested in trading or investing in Tesla. Alrighty, so we are officially in my laptop and we're taking a look at Tesla stock. Now, I want to go ahead and kind of zoom into a smaller time frame and discuss a couple of things. So we saw Tesla stock pretty much sell off for the entirety of the day. We did bounce towards the middle of the day, but one of the things I've highlighted on this channel is that you want to have a holistic approach when it comes to looking into the market. It doesn't matter if you're trading or investing in the long term. You have to be aware of multiple data points, which is why, in the beginning of this video, I pointed out the economic data that came out today with the ADP report. And if you guys want to see how it has a huge significance as far as impacting the market, you could see that the minute the report came out, pretty much the SPY, which is the S&P 500 index ETF, started selling off. And that set the tone for the majority of the day. We saw a sell-off going throughout the entirety of the day. Yeah, again, towards the middle of the day, just like Tesla, we saw a little bit of a bounce, but we definitely closed significantly lower than we did previously, right? And that's just for the overall market. But again, with Tesla, if we go ahead and map it out, we'll see that we closed down almost 3%. So definitely a huge impact on the market. But again, it wasn't just the ADP report, right? It's a combination of so many different data that has, or just global events that has recently taken place. For example, in yesterday's video, I commented on the fact that we had Fitch, right, a major credit rating agency, downgrade U.S. debt from a AAA to a AA, right, which has a huge significance, regardless of the fact that, Treasury or Secretary of the Treasury, Janet Yellen, kind of gaslighted us and downplayed us, or downplayed the significance of it, kind of saying, oh, it's not too much of a big deal. Well, in yesterday's video, I highlighted that, yeah, it is a big deal. You know why? Well, because in reality, there's investors that won't be able to invest in U.S. Treasuries because it's been downgraded. And yesterday I covered how there's some institutional investors, right, who may be part of mutual funds or any other funds that have a mandate that they could only invest in high grade, rated, treasuries, right? And so that could disqualify them from investing in U.S. Treasuries. And so that's a big issue, right? Then, of course, this morning, I also briefed the Push and Profit private group, right? Some more details on what's going on. So we had the United States Treasury Department increase the size of its auctions, meaning that it's planning to borrow more money from the public by issuing more treasury securities, right? So notes and bonds, right? And I mentioned how, again, this was exclusively to the Push and Profit private group, but I'm letting you guys know now. So if you guys want access to the things I say firsthand, you want to check out the links in the description below and check out that first link, right? But what I was telling the Push and Profit private group this morning is that if the markets perceive this increase in borrowing as a sign of fiscal stress or, rising public debt, it can lead to increased uncertainty in market volatility, right? So when the U.S. Treasury increases the supply of bonds, it can attract more investors to buy those bonds, particularly if yields rise as a result of this increased supply. This is because higher yields make bonds more attractive relative to other investments like stocks. Therefore, some investors may sell their stocks to free up cash to buy these bonds, which can lead to a decrease in stock prices. And so this is kind of like a liquidity drain from the stock market, right? And I know, oftentimes, a lot of the individuals that you watch on YouTube, they don't cover a lot of the geopolitical events. They don't cover a lot of the economic data. They pretty much just cover just the news with Tesla. And although I do follow up on the catalyst events that could significantly impact Tesla, again, my approach is to stay data-driven, right? Just like I said in the beginning of this video, we saw alternative data of someone or a senator, right, kind of being bearish on the tech sector. And so let's go ahead and take a look at the tech sector. Let's go ahead and take a look at QQQ, right? Now, the NASDAQ, I want to go ahead and point out, has had a terrific run pretty much this entirety of the year, right? And we ran up a significant amount, and now we're starting to see, things kind of cool off. So, when you see, from a technical perspective that the market is kind of showing signs of a double top, right? But then at the same time, we also see senators, right, who are part of, committees and may have additional information on what's going on, also start shorting the tech sector. Well, that kind of tells you something, right? So, we're seeing things bearish from an economic perspective, from a technical perspective, and then you look at alternative data, we see, senators shorting the market essentially. This is, not a good sign that things are going up. One of the trades I've been kind of pointing out to the Push and Profit private group, I'll go ahead and share it here, is that, Microsoft is kind of showing signs of a double top where we reached the peak that we had back in 2021. And all of a sudden, now we're dropping downwards, kind of showing that it's following the double top pattern. Now, if you guys know me, I don't like to just put too much weight on these patterns. It doesn't mean that just because something has happened in the past, that's absolutely going to happen in the future. But, patterns tend to repeat themselves, right? And, technical analysis, although it's something I don't put too much weight on, it's something that we have to be mindful of. And, one of the things I've been pointing out from a technical perspective with Tesla is that we've rejected below this trend line a multitude of different times. We see a few times over here. We're seeing a rejection over here. And so just everything is kind of pointing towards a downward slope in the short term. Now, does that mean that Tesla can't bounce up and break above this descending trend line? Absolutely not, right? One of the things I state oftentimes on this channel is that, stocks, they don't have to adhere to whatever lines you draw on a chart, right? The stock market doesn't care that just because you drew this sloping descending trend line that, it has to adhere to that trend, right? At the end of the day, the reason why, technical analysis is good to look at certain times is because it helps us map, and identify where we're currently at in the market. And so it looks like we are getting that rejection. Now, one of the things I mentioned in the past is that, I'm going to be mindful of this area right around here of like the early $200 levels. Why? Well, in that area, we see that it's been a support and it's also been a resistance in the past. And we also see that that's an area where we have the most volume relative to price, which is different from your traditional volume by time. And when there's a lot of volume relative to price, that means there's a lot of trading action, there's a lot of buying and selling, which is, causing prices to basically consolidate and move sideways. And so we're heading towards this area down here. Now, does it mean that Tesla is going to fall down this low? No, it doesn't mean that it's guaranteed to happen. But I am going to be mindful for Tesla if we do continue falling down. And I want to see if we hit this level, are we going to show signs of bouncing up and confirming an uptrend? Right? Because that's when I'm going to want to go ahead and buy. So if you're someone who's investing in Tesla in the long term, and you're bullish on Tesla, then a potential opportunity to buy more may present itself very soon, right? And I know, it's kind of difficult to kind of see an opportunity when things are selling off, but that is when the opportunity presents itself. Think about the people who, bought houses after the great financial crisis in 2009, right? And they locked in those low interest rates. They bought, houses pretty much dirt cheap. Right? There's neighborhoods where I know of around my local area where houses were selling for $30,000 and, now they're selling for $300,000. So, there's always opportunities when things are selling off, and that's what you want to pay attention to, especially if you're a long-term investor. Now, if you're a short-term trader, then you're going to want to obviously try to profit off the fluctuation of prices going in the short term. Now, in the short term, I've been very adamant about shorting Tesla, and I know it's kind of like terrible music for some people's ears. I couldn't think of a good analogy, but people hate when I talk about shorting Tesla on this channel, especially because, I talk a lot about Tesla on this channel, and people think that because I'm shorting Tesla, I'm very anti-Tesla, but in reality, I'm just hedging, right? If I'm shorting a Tesla in my short-term trading account, it's really because I'm hedging Tesla for my long-term investing account, right? And one of the things I want to point out is I invest in Tesla in my long-term portfolio, and I continue to buy every time we see these dips. But I also have a separate trading account where I trade Tesla in the short term. And so I always like to clarify that because oftentimes I do get in the comment section, well, how are you shorting and being long at the same time? And so I like to clarify that, right? Trading and investing are two separate vehicles, and you should obviously, approach them completely differently, right? Now, going back into Tesla, looking at what's going on, we have to be very agile at these moments. You can't just be a perma bull or be a perma bear, right? You have to obviously be a little bit more flexible when it comes to what's going on in the overall markets. Even if you're a long-term investor, yeah, I'm bullish on Tesla long-term, but that doesn't mean that I'm oblivious that prices are falling down. I still have to be aware of what's currently going on. And currently going on, we're seeing a lot of selling, right? this pretty much started or sparked up after the 19th when Tesla had their earnings, and we're continuously seeing a lot of stocks not live up to their valuations, right? We just had earnings from PayPal today and a few other major companies, and one of the things that we're seeing with a lot of these companies, not talking about PayPal in specific, but a lot of these companies, is that it's getting hard to live up to the music. And so what do I mean by this? So let's go back to the NASDAQ, the QQQs, right? Let's go to a weekly time frame. One of the things I told the Push and Profit private group is that, when you see these massive run-ups with, the stock running up this high, well, once earning comes or the earning seasons come, well, you have to live up to the music. You have to show that the price that people are paying for the current stock is, is equivalent to what we're seeing in the earnings. And so the higher that things run up, the more difficult it comes to live to your valuations. Remember, people pour money into the stock based on, them expecting to see a return. And so if we have a company that's trading at $500 per share, right? This is hypothetical, and their earnings come out and it shows that they beat their earnings. Okay, well, that's good, but there's a lot more nuance when it comes to earnings. It's not just, okay, well, they beat their revenue expectations, especially when earnings have been revised down for a while, right? You also want to pay attention to forward guidance, but if the earnings comes out and kind of shows that, hey, this stock should be worth 480, but it's trading at 500, well, that tells you that, these stocks are a little bit overvalued. And so that's what we're currently seeing. Now, I told the Push and Profit private group that we're going to see a lot of companies kind of hit and miss going into this earnings season. But my idea, right, and this is just kind of my prediction. It's not something, I don't have a crystal ball, but I think going into the next quarter, that's where we're going to see more earnings kind of miss, right? That's where we're going to see more pain in the overall market, right? Now, of course, I'll go ahead and change that, that update or that overarching idea if I start to see data that points to something else. But right now, when we're looking at all the economic data, all the fundamental data from the earnings of these companies, we start looking at the technicals, everything's kind of pointing towards it kind of not looking good. Now, does that mean that the stock market's going to crash into, some deep abyss? Absolutely not, right? We can't just be bearish and think things are going to go down to zero, right? We have to obviously be tactful and obviously approach these, events coming and obviously take advantage of what's currently going on. Now, I don't want to deviate from Tesla too much, so let's go ahead and look into this a little bit further. So we see that around this area, the mid 200s, it kind of shows us an area where there's some consolidation. So we may see Tesla kind of start maybe bouncing up a little bit, but again, we want to pay attention to see, does it actually break above this descending trend line, or may we bounce up a bit and then continue falling down, right? Now, I don't have a crystal ball, and that's why, I can't just tell you, oh, Tesla's going to go here, Tesla's going to go down there, right? I'm obviously just taking things day by day and obviously staying data driven, right? And so that's something that I'm just looking at both from the short term and the long term. And if you hear anyone telling you, I think Tesla is going to be this amount and this specific day, and I know it, I could guarantee it, you should run away from those people, right? Because at the end of the day, prices are random, right? There's so many different variables that can influence, where a stock is going. And that's why I try to look at so many different data points. I don't just look at just one piece of data, and I try to stay current with what's going on with the overall market, and I also try to keep the individuals in the Push and Profit private group updated with what's going on, because everything plays a role. And so one of the things I'm going to be doing is, like I said, in my long-term portfolio, monitor Tesla, see if Tesla is going to continue falling down. If so, when can I go ahead and add more cash in? Now, I know some people invest differently. They invest pretty much an equal amount every single month, and that's completely fine. I mean, there's research papers that, debunk that that's a good idea. There's other research papers that say it's a great idea or a bad idea. Obviously, when it comes to investing, everyone's going to have their personal preferences, right? For my long-term investment portfolio, for a lot of the index funds, which I mainly invest in, just plain old index funds, I'm pretty boring. I do just dollar cost averaging an equal amount every single month. But for individual stocks like Tesla, I don't do that. I like to wait for those opportunities. back then when Tesla was falling down, and I pointed these out in previous videos that, hey, Tesla is probably going to be selling off these days, but I didn't pull the trigger and I didn't add more into my long-term portfolio. That's just a mistake on my end. I'm not going to be able to buy exactly at the best points. At the end of the day, you guys have to also understand I'm human, and I'm not going to buy at the absolute lows and sell at the absolute tops, right? That's just not possible, right? But obviously, I'm really excited for another opportunity for Tesla to fall down. And I know some individuals may say, wow, excited for Tesla to fall down? Yeah, because the market's very cyclical, right? We have ups and downs. And I've been investing in Tesla since I believe I first started investing in the stock market in 2016. First stock I ever bought, fun fact, was Microsoft, which is funny because, I've been talking a lot about Microsoft and the Push and Profit Private Group and talking about how I'm bearish, but trying to stay on tangent, right, and not going or deviating. I first bought Tesla stock back in 2017, right, and this was at a time where I had a huge lack of knowledge that I have now. I didn't read as many books as I did now. I didn't take as many courses. Even at that time, I was still in college, so I honestly didn't even know what I was doing, but I just liked the idea with Tesla. But I benefited, right? There was definitely times where Tesla sold off a lot of times, especially if you guys, I don't know if you guys remember this, but December of 2018 was such a difficult time. And then of course we had 2019 when Tesla sold off. Then we kind of rallied up. Then this time was almost heartbreaking, obviously the pandemic. Then we had a huge rebound. The market's very cyclical, but I am bullish on Tesla in the long term simply because I believe in what they're doing. And it's not because I just want to believe in a fantasy, but I'm also seeing the data show that a lot of these legacy automakers are not being able to hold up and be profitable in the EV space. Right? And so that's something that I've been pointing out. Look at Ford's recent earnings. You take a look at Ford and you kind of reassure yourself that Tesla is still in the lead. Now, is Tesla still going to be in the lead in 2045? Who knows, right? But until then, I'm going to stay very data dependent. And right now, the data is pointing out that, yeah, things are looking kind of bad now. But if Tesla stays on this track and is still able to stir up demand, even if we head into a recession, and they're still able to remain profitable and have these, decent profit margins on these EV vehicles, well, that's a good sign. And I'm, ready to buy more Tesla. But at the end of the day, you should only trade or invest in whatever you see value in. You should never just copy whatever someone says, not what I say, not what Kathy Wood says, not what whoever you look up to in the markets, whether it be Jim Cramer from CNBC or whoever it is. You should always do your own due diligence and obviously only trade or invest in whatever you see value in. But with that said, I want to keep this video very short, sweet, and concise. I will be updating and briefing the Push and Profit Private Group with some additional information, but I'll probably share that a different day with you guys publicly. Hopefully you guys found some utility in this video. And with that said, I'll see you guys on this next video right over here. Take care, guys.